Hey, what's going on, traders? Today we are going to look over some new material, okay? And I'm definitely go over some things that we talked about before. So let's get the party started. First, let's go over the structure once again because I noticed that every time I do one of these updates, for some reason, I have to continue to show you guys market structure because some of you guys still don't understand. I see a lot of you guys making the same mistakes. You are doing things like, buying at resistance or selling at support, or you're basically doing things like going or trading based on your gut. Okay. And guys, you have to understand structure is king. All right. I don't know how many times I have to repeat this same thing over and over and over. Structure is king. Um, it's not about what you think is going to happen. I know I see some of you guys, you know, think you know what's going to happen. Guys, I've been doing this for 13 years. I still don't know what's going to happen next. I probably have a good idea what's going to happen next. But for the most part, we traders, we react. Okay, that's the best thing we can do is to react to the situation, not try to predict and say things like, "Oh well, this is going to sell." I know. Well, you don't know. Okay, so we have to react to the situation. We don't want to get too cocky because the market will humble you. Okay, it will. Trust me. I've been through that so many times. Now, let's go over the simple structure. Okay, market structure is basically how the market moves. Okay, it's just simple, guys. Uh, let's go over a trending structure. So we have this. Okay, high highs, high lows. Just very simple, guys. Right? We know that these swing lows are support and resistance, and these swing highs, right, could provide support. Okay, so we know that these are key areas right here, and we know that these are key areas right here. We also know that if market breaks this structure, okay, with conviction, okay, and it pulls back, it's a strong possibility we might find resistance around here. Okay, this is the stuff. This is simple stuff that you should know as a trader. Okay, I still see some of you guys still mess things up. Right now, um, if the market is ranging, okay, guess what? We are looking at the extremes. Simple swing highs and swing lows. These provide trading opportunities. Okay, when price comes to these areas right here, we can look for trades around those areas. It's that simple. Some of you guys, again, you know, want to play Superman and want to say, "Oh, this is going to happen." Guys, just wait for simple structure and react to those areas. All right. Um, what else? Okay, we look at pre-market highs, pre-market lows. Okay, so that provides areas. Okay, where market this is could be the pre-market high. Okay, and this pretty much um, could be resistance. Okay, right here, and this could be the pre-market lows. This could be support. Okay, if you're dealing with forex, it could be the Asian lows. Okay, or the Asian highs. Right. Um, it's that simple, guys. So make sure you know these areas. Again, this is stuff that I go over in the course. This is why you have to look at the course more than once. Some of you guys, I know for a fact, you just go through the course real quick and you probably don't look at it again. Okay. These are key areas where you say, okay, when it gets to this area, there's a possibility we might find resistance from this. Um, So if I'm near this area, I probably don't want to even try to look for buys right now, unless I see some nice little action where it breaks it, pulls back, maybe continuation, right? So you have to understand this stuff, okay? Because again, some of you guys just, I know, I understand that you want to make money, but this is a process, and you really have to fall in love with this stuff and treat it like a business. Because if you don't, the market will take your money, and that's how it is, right? So please understand structure, understand structure, understand structure. The only time that I like to buy at resistance or sell at support is when I see some type of consolidation and I'm looking for the market to break out of that consolidation. So let's say that we are at resistance, okay, and then the market start to build up right here. It's a strong possibility if they break this, okay, they can break resistance, okay, and keep going up. So that's the only time I like to, look at buys around resistance, and vice versa. If market's going down, same thing. Okay, we start to build up. Okay, that's the only time I probably will take a sell at resistance, because smart money loves to play around these areas, and a lot of times you will see buyers come around support and sellers come around resistance. And another thing, guys, please get used to looking at head and shoulders or inverse head and shoulders, right? So if the market is basically going up, I like to see, a decent pullback for head and shoulders. So let's say that the market pulled back right here, okay, and then breaks out and comes back in. Strong possibility this is going to be a left, okay, shoulder right here. If the market looks tight, small pullbacks like this, I'm not really looking at a head and shoulders. Okay, when the market just looks like this, give you that deep pullback, then breaks the high, and go back deep again. Strong possibility that the market probably will find some type of resistance right here. So get used to that. If I'm buying, let's say I bought right here and I see the market having trouble right here, I will get out, break even, because it's a strong possibility. Okay, it will come back and start selling. And also, I'm always looking at this areas right here to, take a trade. Okay, and also you have to get familiar with the inverse head and shoulders too. It's the same concept. So if the market is going down, right? Okay. Again, the market give you that nice little pullback, go back up. This is a strong possibility this will hold as a left shoulder. Okay, so just get used to those head and shoulders. Write this down, have it on your checklist, so you guys can get used to this. Okay, this is all part of market structure. All right. Now with the last system that I taught you guys, right? Trading like a professional. Okay. Basically, it's the same system, okay, as the first one. The only difference is basically you're not looking at candlesticks, and you're looking at 2 time frames. Okay. One of the patterns that I love, okay, is, so let's say that we're going down, right, and then we break this trend line, we start to consolidate right here, right. I love these consolidations right here, guys. These are orders right here, because a lot of times the market will come back, all right, and basically fill some more orders to go back up to the upside. These areas right here, right, are areas where I'm looking to get in and look to basically get in with a limit order a lot of times, and basically, trade around those areas. So every time I see an area like that, guys, I'm looking to, put a zone over it. So let me show you an example real quick. So right here we have support, okay? The market break out of this support right here. Notice how we have, okay, these orders right here. Nice consolidation. If I see this, I would love to, market comes back to this area, I'd love to put a limit order and let the market, do its thing, bounce off this area and, go up. So you have to be aware of those areas, guys. Right? That's honestly, that's one of my secret sources right there. Okay, these areas, I love these areas right here because a lot of times you will see the market come back to these areas, okay, and react to it and bounce off these areas. Okay, so every time I see this consolidation going on right here, I like to put a zone over these areas. So when price comes back to this area, okay, if everything looks good, I'll put a limit order, okay. So as soon as price gets here, I'm in the market, and then I'm waiting for, that push to the upside. So again, this is stuff you have to study. Like I said before, guys, this stuff happens every single day. Just make sure that you see this stuff in real time. All right. So let's go to the new material, guys, so I can show you guys what I want to talk about today. Okay, guys. So today is all about how to fade the market, right? Now, fading is basically, going against the trend, but I'm not going to really show you guys how to go against the trend. It's more how to go against a, temporary move. And I'm going to show you guys what I mean later. Most of you guys are not at a level where you can actually look at the trend and say, okay, it's time to fade it. But I'm going to give you guys some strategies right now that I like to use, okay? And I've been using these strategies recently to fade a quick move, okay? Now, you can do this with the trend. You can do this going against the trend, and you can do this as support and resistance. So it's pretty much reverse supply and demand, okay? So you're basically doing the opposite of supply and demand. So regular supply and demand, you're looking for, let's say you're looking for, aggressive selling to the downside. You're waiting for the market to pull back to that area and you're looking to sell. Well, this strategy, okay, you're looking for the market to do the same thing, but you're not looking for, that sell. You're looking for that aggressive selling, and you're looking to basically buy this move and ride it up, okay, either to this supply level right here, okay, or even more, okay. And I'm gonna show you guys how to do that today. So let's go. Okay, guys, so again, there's 3 ways you can do this. You can do this with the trend, number 1. You can do this at support and resistance, okay, number 2. And number 3, you can do this when the market breaks out of support or resistance. And I'm going to show you guys all 3. So the first one I'm going to show you guys is with the trend. So right here, we have a demand level right here, okay? And basically, we're waiting for a price to come back. Now, notice how price comes back to this demand level. Okay, very, aggressive. We have this aggressive bar right here, but pretty much all sells. Okay, except for this one green candle, but pretty much, selling like crazy, and that's what we want, right? We want this to sell like crazy right at demand, and the next thing we want to do is drop down. Okay, time frame. So whatever time frame you're going to use. Right now, we're going to use the 1 minute, okay? But again, if you're using the 15-minute chart and then you're using a 5-minute chart to enter, you can do that. So right here, we're going to drop down to the 1-minute chart and we're going to look for consolidation, okay? So that's the next step. So we looking for that aggressive selling, okay? And then when we see it come at this demand area right here, we're going to drop down and we're going to wait for consolidation. As soon as we see this consolidation, we're going to take that break, okay, and we're going to ride this baby to the upside, okay. So that is the whole strategy. We were looking for that aggressive buy-in so we can basically go against the sellers, okay, and then ride it up. The reason why we want to do this, guys, is because number one, a lot of times you will see smart money shake out rookies, okay, because most rookies don't know what they're doing, right? And another thing, the stuff that I'm teaching you guys right now, just keep it to yourself because we want, rookies to continue to make mistakes. So we don't want, everybody to, trade like us. So let the rookies, trade the same way. So keep this stuff to yourself because that's how we make our money. When rookies make mistakes, we can actually take advantage of that. Okay. Now, you will see, especially in the morning time, I love this strategy in the morning. Okay. In the morning time, you will see the market open up and basically shake out the little guys, the rookies, and then they will reverse the move, okay, or reverse the market and go the opposite way. So when rookies see a lot of selling like this, okay, they get scared. They're not thinking, oh my gosh, this is just a shakeout. They're not thinking like that, guys. They say, oh my gosh, the market is selling off like crazy. I need to get out, or I need to go with the selling. So I'm gonna start to sell right here. Whatever the case is, a lot of rookies, they get scared when they see a lot of selling, okay, especially if the market's going up. So smart money loves to shake rookies out of their positions so they can basically take their money and shake them out and then go up to the upside. Okay, so I'm gonna show you guys another example. Okay, guys, here's another example. Okay, so we have the market going up. We have the man right here, obvious. Okay, and we have a lot of selling going right at that demand. You see how we have nothing but red candles going straight to that demand level. Okay, so let's drop down to that 1 minute chart. Again, if you're using the 15-minute chart, you could drop down to the 5-minute chart. So right here, what do we see, guys? We see nice consolidation going on right here. I'm looking for that break out of that consolidation, okay? And I'm looking for the market to continue to go back up. Now, why do I want to look for consolidation? Well, the reason why is because, number one, if I try to, let's say I try to buy this right here, as soon as I see a green candle, right? A lot of times the market will basically, come up a little bit and continue to go back down. Okay. So this selling right here can actually be real selling. So we want to wait for confirmation, wait for smart money to come in. When we see consolidation like this, that tells us that smart money is basically, building up orders and basically loading up right here. Okay. And when smart money, breaks this consolidation, it's a strong possibility, okay, that it will continue to go back up. So that's why we wanted to wait for consolidation, because if we try to buy it, before the consolidation, it's a possibility, the market can actually continue to go back down. Now, I'm going to tell you that, guys, that a lot of times you will see the market shoot down like this and do a V bottom and continue to go back up, and you won't basically catch, or you won't see consolidation at all. Those moves right there, it is what it is. You got to just live with that, okay? Unless you want to somehow try to catch that V bottom. Me personally, I don't like that. I like to look for confirmation because I believe the odds are in my favor when I look for something like that. Now, again, sometimes you will see a V bottom and the market just goes straight up. It is what it is. Don't worry about that. So that's with the trend, guys. When you see the market sell off a lot, especially at a demand level, and we want to see that consolidation, and then we want to basically take that trade. So that is with the trend. Now let's go to support and resistance breaks. Okay, so this is support breaks. So in the morning time, okay, when the market opens up, a lot of times you will see, okay, we have, let me show you guys real quick. We have support right here, right? So the market breaks support, okay? A lot of times you will see the market do some type of fake out in the morning time. But the key is we want to see aggressive selling, okay? That's the key. See how we have this aggressive selling right here, right? like I said, I love to use this strategy at the open, okay, in the morning time. It don't have to be exactly right at the open. It could be, 10 minutes after open, 15 minutes after the open, uh, 20, 30 minutes after open. But you will see a lot of times after the market open, okay, they will do some fake move to the downside or upside and they reverse the market. So we have this nice aggressive selling going on right here, okay? And we want to fade this supply. So we have this aggressive selling. Let's go to the 1 minute chart. Let's see. We see consolidation. So what I see right here is I see this right here. So the way I will look at this is we are consolidating right here. And when we break out of this right here, I'm looking to get in, right? So I'm looking to get in after we break out of this consolidation to the upside. Now, again, a lot of times we go right back to supply and the market will basically sometimes, find resistance at supply, whatever the case is. So this is basically how you go against supply, okay? When the market breaks out support or resistance, vice versa. Now, me personally, I like to use this strategy, only when the market is selling off. I don't know why. You can use this strategy, vice versa. So let's say that we have a lot of demand going on at a resistance. You can still use that. But me, for some reason, I guess because we've been in the bull market so long, I like to use this when the market sell off and get those quick longs to the upside. All right, now let me show you guys another example. Okay, here's another example right here. We have pretty much the market breaking out of the support right here. Nice little aggressive selling right here. If we drop down to that 1 minute, you definitely see consolidation going on. Okay, and we're looking for that pop to the upside. Now some of these moves will provide some crazy reversals. Okay, and some moves won't provide crazy reversals. It will just provide a nice little pop maybe to supply, and that's about it. But a lot of times you will have these nice little reversals out of these moves. Okay, so keep that in mind. Okay, so that is the support break. Again, you could do this vice versa if the market is breaking out of resistance and trying to go to the upside. Okay, and again, I love these moves right at the open, okay, or after the open, okay, maybe 15 minutes, 20 minutes after the open. I love these moves because smart money loves to fake out the rookies and basically, reverse on them, right? Now, I know some of you guys are going to ask me, hey, what about if this happens in the afternoon or whatever the case is? Will this still work? Yes, it will still work, okay? It don't have to be right after open, but okay, when you combine the open, okay, or Asian session, and you have New York open, or you have the New York session starting in Forex, okay, that combination, to me, it works very good. Okay, so let me show you guys what this looks like at support and resistance. Okay, guys, so we have the market. This is the Russell right here. So we have the market. Actually, we have resistance. So this is pre-market high right here, guys. Right. So we have resistance over here. So overall, let me draw this line right here. Overall, this is when the market opened right here. Okay, it shot right into resistance. Okay, a lot of demand, and it shot right down. Okay, a lot of times, again, you will see that, and that at the open. So you want to be aware of that. So this one right here, we were looking for the market to basically slam into resistance or slam into support. Okay, so in the morning, as soon as we open, the market slammed right into resistance, a lot of buying, and it slammed right back down. Now I want you guys to see this. Notice how it slammed right back down to support right here. Okay, aggressive selling. It gave you another opportunity to buy this right here, and notice how we shot up. So again, guys, you have to be aware of this in real time Because a lot of times when people see a lot of buying or a lot of selling, okay, automatically what you think? Oh my gosh, a lot of sellers is in the market, right? I'm quite sure some of you guys think that, right? When you see a lot of selling going on, you're like, oh my gosh, a lot of sellers in the market. I'm not touching this market, right? Well, we want to be 10 steps ahead of everybody, okay? So when we see a lot of selling at support and it bounce and it shows us, that it wants to bounce, we want to take advantage of that, okay? We don't want to be like rookie traders. We don't want to say, oh my gosh, there's a lot of selling. I'm not going to touch that, okay? No, we want to actually get in that move. Now, notice how we have a lot of selling right at demand and it popped up, okay, to the upside. So we have to be aware of this, guys. You can't be scared of a lot of selling, especially if it bounce, right, at a key level and it shows us that buyers are still in control, right? So let me show you guys another example. Okay, guys, here's another example. This is when the market opened up and then we shot back up, okay? We have the market basically hitting this swing high right here, finding resistance. We have a lot of buying right here. Notice how we have a lot of buying right into this swing high right here, and it shoots back down, okay? Actually, let me go to the 1 minute. And basically, we have this nice little channel right here breaking out. So if I was looking at this market right here, me personally, I would definitely, take this trade when we break out of this to the downside. It's a nice little trade. Now, again, we had a lot of selling, okay? A lot of selling right at support, guys. You see this? A lot of selling. A lot of people will see that, okay, and say, oh my gosh, a lot of selling. I'm not touching that. I want to sell too, right? When rookies see this, guys, when they see things like this, they're not thinking about buying, okay? We want to be different, guys. We want to play with the big boys. We want to play with smart money. We don't want to think like everyone else. So when we see a lot of selling at key levels, we don't want to say, oh my gosh, a lot of sellers are in the market. The market might go down like crazy. We don't want to say that. We want to say, okay, we want to see how price reacts to that key level. Notice how it just shot right back up, right? And, continue to go back up. So we have to understand, guys, when we see a lot of selling or a lot of buying at key levels, we want the market to go at those key levels and see how it reacts. Because a lot of times, especially, again, when the market opens, they will fake out a lot of rookie traders to go, the opposite direction. So keep that in mind, guys. This is a very good strategy that I use a lot nowadays, okay? And you have to be aware of this stuff because you have to be 10 steps ahead of, everyone else. You want to ride the wave. You want to basically buy when smart money's buying. And you want to sell when smart money is selling, right? Now, I said before, I like to see consolidation, okay, after I see a lot of selling at support or a lot of buying at resistance. For example, right here, you see a lot of selling right at support, okay? And notice how the next bar is a nice bullish bar, okay? So let's say that you're trading one time frame, okay? Can you get in that move, okay? Yeah, I mean, if you are trading just one time frame and you see this nice bullish bar, then, maybe you want to trade that way. But like right now, the way I'm trading, I'm using, multiple time frames, and I like to see consolidation. If you don't want to use consolidation and you see a nice bullish bar right here, you can go ahead and test it out and see if that works for you. All right. So let me go show you guys another example. Okay, guys. So here's another example right here. This is where the market opened right here, guys. And we slammed right back down all the way to what? Support. Okay. This is support right here, guys. Right here. I'm quite sure if you was looking at this market right here, okay, and you saw a lot of sellers coming right at this key level, I'm quite sure you're like, oh my gosh, the market is selling off like crazy. I want to get in this market. Guys, you have to understand the market will do this in the morning time to shake people out. Okay. Now, this doesn't happen every single day. Okay. You will see sometimes the market will slam down and continue to go down. All right. So you have to keep that in mind. But when it reacts to those levels, that's why we have to be, waiters and wait for a reaction. Okay. And then we attack. Notice how we had this nice bounce to the upside and the market kept going up. So keep that in mind. Okay. When you see a lot of selling at key levels, especially in the morning time, you know, be aware of that and be ready to take advantage of those opportunities if the market show you some, setups to get in. All right. So that's pretty much it, guys. I do want to show you guys one more thing. So let's get to that right now. Okay, guys. So the last thing I want to talk about, okay, is when I take a trade, sometimes I do not get out of the trade, okay, unless I see a reason to get out, okay? So, good example right here. We are at support right here. I actually took this trade, so this is a very good example. We had support, support, support. We had a correction at support. We break it out of this correction. I got in, okay, and I got out actually, guys, when I saw pretty much this right here. We had this wedge going on right here, and as soon as we broke this wedge right here, okay, I got out. Now that's just one way, okay, or one reason to get out when it comes to basically, using the strategy. So basically, when I'm in this move, I'm not looking to get out unless the market tells me to get out, okay, and that's only on trades that I feel that has room to go. So I'm not going to do this on every single trade. I'm going to do this on trades that I believe that has room. Okay, so this trade, if you look at it structure wise, basically on a bigger time frame, we had this big triangle, and it looks like we was going to break out of this triangle and continue to go back up, right? So I'm looking at that and saying, okay, this probably has a lot of room to go to the upside. So I'm not really looking to get out unless the market tells me to get out. Again, you don't have to do this, okay? But it is good to practice this, okay? Because sometimes you would get some, decent moves out of this, okay? Now, this is one way I would get out. If I see the market breaking out of either a channel or a wedge, I will get out. The next way I would get out, if let's say the market is consolidating right here and it's giving me this horizontal consolidation right here and it breaks out of this, I will get out. Okay, so I would trail my stop loss, not trail it, but as soon as I start to see this action right here, I will put my stop loss right below, okay, this candle. So as soon as it breaks this candle, okay, I'm out because there's a strong possibility the market could reverse. So that's the second way I would get out. Okay, so the first way, if I see the market breaking out a wedge or a channel. Second way, if I see the market consolidating, okay, maybe doing some horizontal consolidating going on, and then it breaks that, I'm out. Okay. The third way, guys, is if I see an exhaustion bar. So let me show you guys an example of that. So basically, let's say I went long right here, guys, and I'm looking for the market to basically, give me a good reward. If I see a nice exhaustion bar like this, I'll probably get out the next bar. So I'll put my stop loss, below this candle right here. Or sometimes it won't even go below this candle. It'll give me like a small candle right here. And I just put my stop loss below here. Okay. So if I see an exhaustion bar, I'm looking to get out, because a lot of times, when you see these big exhaustion bars, basically the market might reverse because, they're doing a last little shakeout before, the market reverse. So that's the third way, guys. I'm looking to get out if I'm looking to basically hold, right? Again, you don't have to use this, but you can test this out and see, if it works for you. All right. Now, I'm only looking for an exhaustion bar, if, I have a decent profit. So let's say that I got in right here, and notice how we have this nice exhaustion bar right here. I'm not looking to get out because I just got in right here. So this is not enough profit. I'm looking for the market to go up. Now, if I'm in this market right here and I get a good exhaustion bar anywhere around here, and I'm have a decent profit, I'm looking to get out. All right, and basically, I'm always looking at the time frame, where I enter. So if I'm using, the 5 minute for my bigger time frame, and I'm going down to the 1 minute time frame, basically I'm looking at the 1 minute time frame to get out. Okay, I'm not looking at the 5 minute time frame. I'm looking at the 1 minute time frame to get out. Okay, and the same thing if I was looking at any other time frame. So my bigger time frame, let's say I'm looking at the 15 minute. Okay, that's my bigger time frame. And let's say I'm using my 5 minute for my entries. Well, I'm not gonna look at the 15 minute. I'm gonna look at the 5 minute to get out. Okay, so that's about it, guys. If you have any questions, let me know. Talk to you guys later, and have a great day.